Dirty dealings, corporate battles, consumer woes. This is Evening 5. Petronas is not considering any legal action against the Sarawak government or its state-owned oil and gas company Petroleum Sarawak or Petros over the distribution of natural gas there. This was clarified in a joint statement by the Sarawak Premier's office on Tuesday following a meeting between them on the same day. Ongoing discussions between them regarding gas distribution in Sarawak will be concluded soon, and they respect and abide by the federal and state laws regarding the matter, said the statement. Petros signed gas sale agreements with Sarawak Petchem and Sarawak Energy in July following previous announcements in the Sarawak State Assembly that Petros was set to take over from Petronas as the sole gas aggregator in Sarawak. Currently, a majority of Petronas' LNG export cargoes from Malaysia are either sourced from Sarawak or pass through the gas infrastructure in the state. The new arrangement could impact Petronas' cash flow, which ultimately determines its dividend payout to the federal government, Petronas President Tan Sri Tunku Muhammad Taufik said at the group's financial results briefing earlier this month. Singapore's Channel News Asia previously reported, quoting sources, that Petronas was considering filing a court injunction against Sarawak to maintain its role as the sole custodian of Malaysia's hydrocarbon resources. However, Sarawak Premier Abang Johari Openg dismissed claims of stalled discussions, stating that talks with Petronas were ongoing and expected to conclude before October 1st, a deadline he had first revealed in July this year. At the time, the Sarawak Premier said Petros would collaborate with Petronas in developing upstream and downstream activities in the state, as he affirmed that the Sarawak government and Petros had no issues with the national oil firm. Listed companies on Bursa Malaysia's main market and ACE market, as well as large non-listed companies with annual revenue of 2 billion ringgit and above, will have to comply with the newly launched National Sustainability Reporting Framework in phases. The NSRF, according to the Securities Commission, addresses the use of the IFRS Sustainability Disclosure Standards issued by the International Sustainability Standards Board as the baseline for sustainability disclosures for companies in Malaysia. The first phase, effective next year, will apply to large listed companies on the main market with market capitalization of 2 billion ringgit and above. This will then be extended to other main market listed issuers in 2026, followed by listed companies on the ACE market as well as large non-listed companies in 2027. With the launch of the NSRF, Malaysia joins more than 20 jurisdictions around the world, representing a collective global gross domestic product of 55%, which have adopted or are moving towards implementing IFRS S1 and S2 standards pertaining to sustainability and climate-related financial disclosures. SC Chairman Datuk Muhammad Faiz Azmi said that under the NSRF, the large listed issuers on the main market, about 130 companies will have to comply with IFRS S1 and S2 next year, with a focus on climate disclosures, and the first report is due in 2026. He added that they represent over 80% of market capitalization on Bursa Malaysia. Finance Minister to Datuk Sri Amir Hamzah Azizan, who graced the launch, said that the framework is more than just a regulatory advancement, as it addresses the information required by investors and financiers to help with capital allocation decisions. Amir added that as such, sustainability is not an option, it is a necessity, and that companies worldwide are being held to higher standards of environmental and social performance, and Malaysia is no exception. Scientex saw its net profit increase more than 18% year-on-year in the fourth quarter, thanks to higher contributions from its packaging and property segments. Net profit for the quarter came in at 135.9 million on the back of revenue improving by 9% year-on-year to 1.17 billion from 1.07 billion previously. Scientex declared a final dividend of 6 cents per share for the quarter, which brings the total dividend paid for FY 2024 to 12 cents per share, up from 10 cents previously. For the full year, earnings was up 24.4% from 438.1 million to 545.2 million, as revenue grew 9.8% year-on-year to 4.48 billion ringgit. Moving forward, Scientex expects that the packaging business will continue to face a challenging outlook due to ongoing supply chain disruptions, inflationary pressure, fluctuation in foreign currency exchange rates, geopolitical tensions, and subdued market sentiment. However, the group said it remains committed to driving sustainable performance for the packaging division in the upcoming financial year, while managing its operational costs and improving its operational efficiency to maintain its competitiveness in the market. On the property division, the group said it remains optimistic that the demand for affordable homes will remain resilient for the upcoming financial year, following the positive take-up rate from its new property launches. MyNews Holdings posted its fourth consecutive quarter of profits, partly helped by improved profit margin and higher share of profit in its jointly controlled entity. The convenience store operator reported a net profit of $2.63 million for the third quarter, reversing a net loss of $2.16 million from last year. Revenue rose 12% year-on-year to $207.5 million from $185.8 million for the quarter under review. No dividend was declared for the quarter. On its prospects, MyNews noted that its retail brand CU recently expanded into the east coast of Peninsular Malaysia, opening 4 outlets in Pahang, 1 in Terengganu and 4 in Kelantan. Simultaneously, the opening of new stores in other parts of the country is ongoing, while the existing stores are improved and revamped whenever necessary, said MyNews. To date, MyNews' total store count stands at 631, comprising 476 MyNews outlets, 135 CU stores and 20 WH Smith branches. The company also said its food processing centers production will continue to grow in tandem with retail sales. With ongoing support from its Korean and Japanese business partners in food product development and production, MyNews explained that the FPC remains innovative in delivering high-quality products and to meet consumer demand. In addition, MyNews announced that its standalone Maru Coffee Cafe will be launched in the fourth quarter of FY 2024. Shah Alam-based Fibreglass reinforced plastic manufacturer WF Holding has filed for listing on Nasdaq to raise up to $10 million or 42 million ringgit via an initial public offering in the US. WF Holding filed with the US Securities and Exchange Commission for the IPO on Monday to raise funds to expand its production capacity, grow and upskill its workforce, and fund its working capital. The proposed IPO involves a public issue of 2 million new shares at between $4 and $6 per share, representing up to 8% of its enlarged share base. At the midpoint of the proposed IPO price range, WF Holding would command a market capitalization of $124.75 million. WF Holding said in a statement it plans to procure another 2-acre factory with a production space of around 40,000 feet, which will increase our current production floor capacity by 150%. It also plans to add another 50 workers to its workforce. WF Holding CEO Liu Chi-hong and brother Liu Chi-seong hold a 74.96% stake in the company via Liu Capital Private. Among those on their board of directors include independent director Datuk Lua Chun Han, who is also Group Executive Vice Chairman of PRG Holdings, as well as former Deputy Minister of Finance Datuk Lee Chi Leong. WF Holdings' wholly owned subsidiary Winfeng Fibreglass was incorporated in Malaysia on March 28, 1984. The company has manufactured fiberglass reinforced plastic products for 3 decades, catering for industries such as chemical processing, water and wastewater treatment, and power generation.